Hello everyone, this is your instructor in capital market, and for today, our topic is secondary market. So in this video, I'm going to discuss the concepts relating to secondary market. Last time, I discussed the primary market. Ngayon naman, ang i-discuss ko ay yung secondary market. So what is a secondary market? The secondary market is where investors buy and sell securities they already own. Binili ng investor yung securities for the first time sa issuer. Yung transaction na yan, nangyayari yan sa primary market. Kapag binenta ng investor na yon yung securities sa ibang investor, hindi na nangyayari yan sa primary market. Nangyayari na yan sa secondary market. So essentially, the secondary market is a market where the exchange of securities between an investor and another investor takes place. So why does the investor sell the securities to another investor? Of course, meron siyang purpose kung bakit binenta niya or ibebenta niya yung securities sa other investor. Let's say na kailangan niya talaga ng pera, or pwede rin naman na ang habol niya sa pagbili at pagbenta ng securities ay para kuha ng short-term gain, para magkaroon ng short-term gain. So, binili niya yung securities sa mababang presyo at ibebenta niya yung securities sa mas mataas na presyo. The secondary market provides an avenue for the securities to be liquid or easily convertible into cash because there are existing sellers or buyers of the securities. Sa secondary market kasi, sobrang dami ng investors. Sa sobrang dami ng investors, mas mabilis na mabenta yung securities. Again, in the secondary market, it is where the transaction between an investor and another investor takes place when it comes to the buying and selling of securities. Transactions that occur on the secondary market are termed secondary simply because they are one step removed from the transaction that originally created the securities in exchange. In other words, those transactions that occur in the primary market are called primary transactions, simply because new securities are bought and sold for the first time. On the other hand, those transactions that occur in the secondary market are called secondary transactions, simply because the securities that are traded in the secondary market passed through the primary market before they are exchanged in the secondary market. In secondary markets, investors exchange with each other rather than with the issuing entity. Sa primary market kasi, yung issuer or yung issuing entity, siya ang mag-i-issue ng securities sa investor. Sa secondary market naman, yung investor ang magbebenta ng securities sa ibang investor. Next, let's now proceed to different instruments in the secondary market. The instruments traded in the secondary market consist of the following. First, fixed income instruments, second, variable income instruments, and third, hybrid instruments. Let's start with the fixed income instruments. When we say fixed income instruments, these are primarily debt instruments ensuring a regular form of payment such as interests and the principal is repaid on maturity. Actually, kaya siya tinawag na fixed income instruments kasi yung return or income na makukuha ng investor from these instruments ay fixed, hindi nagbabago. Ang sabi dito, primarily debt instruments. Meaning to say, hindi lang nakalimit sa debt instruments ang fixed income instruments. Ang fixed income instruments ay pwede ring equity instruments gaya ng preference shares. Examples of fixed income instruments or securities are debentures, bonds, and preference shares. Debentures are unsecured debt instruments. Itong debentures ay unsecured kasi wala siyang collateral. It is not secured by collateral. Di ba usually, kapag umutang ang isang tao, meron siyang pinoprovide na collateral. The purpose of the collateral is for the protection of the creditors, yung mga nagpautang. Kasi if ever hindi na kayang bayaran nung umutang yung liability niya, then kukunin nung creditor or yung nagpautang yung collateral. Dito sa debentures, unsecured siya because wala siyang collateral. As for bonds naman, they are essentially a contract between two parties whereby a government or company issues these financial instruments. Ang bonds ay debt instruments. Ini-issue yan ng government or companies to raise additional funds. As investors buy these bonds, it allows the issuing entity to secure a large amount of funds. Kapag ini-issue yung bonds sa mga investors, nakakapag-generate sila ng additional funds. However, kailangan nilang bayaran ang investors. Investors are paid interests at fixed intervals and the principal is repaid on maturity. Individuals owning preference shares in a company receive dividends before payment to equity shareholders. Take note na ang preference shares ay hindi debt instruments. Ang preference shares ay equity instruments. Kaya yung fixed income instruments hindi lang nakalimit sa debt instruments. Yung ibang fixed instruments ay equity instruments gaya ng preference shares. Yung shares, of course, may dalawang klase yan. Ordinary shares at preference shares. Kung yung hawak ng investors ay ordinary shares, then ang tawag sa investor na yon ay ordinary shareholders. Kung ang hawak ng investor ay preference shares, then ang tawag sa investor ay preference shareholders. Take note na yung equity shareholders dito pertain to ordinary shareholders. When it comes to dividends, unang makakatanggap ng dividends yung preference shareholders kaysa sa ordinary shareholders. That's why tinawag na preference shares, as the name suggests, those who hold preference shares will be paid first. If a company faces bankruptcy, preference shareholders have the right to be paid before other shareholders. Take note, although nauuna silang nababayaran, yung payment sa kanila ay fixed. Unlike sa ordinary shareholders na kung saan variable yung return na nakukuha nila. Next, variable income instruments. Investment in variable income instruments generates an effective rate of return to the investor, and various market factors determine the quantum of such return. Dito naman sa variable income instrument, yung return or income na ma-generate ng investor ay variable. Meaning to say, paiba-iba yung return. Hindi siya fixed. These securities expose investors to higher risk as well as higher rewards. So, mas mataas yung risk at rewards dito sa variable income instruments simply because nag-fluctuate yung price ng securities. Pwedeng mag-increase yung price ng securities or pwede rin naman na bumaba yung presyo ng securities. Ang magandang halimbawa ng variable income instruments ay yung equity shares. Take note na yung equity shares na tinutukoy dito ay yung ordinary shares. The equity shares pertain to ordinary shares. Equity shares are instruments that allow a company to raise finance. So a company issues ordinary shares in order to raise finance or funds. Also, investors holding equity shares have a claim over the net profits of a company along with its assets if it goes into liquidation. Meaning to say, variable yung return or income na makukuha ng ordinary shareholders kasi nakadepende sa net profits or net income ng company. Kung malaki yung net income ng company, then malaki din yung return. Pero kapag mababa yung net income ng company, of course, mababa din yung return. In case niliquidate yung company, itong ordinary shareholders, meron silang habol doon sa net assets ng company. Next, hybrid instruments. Two or more different financial instruments are combined to form hybrid instruments. So, combination ito ng iba't ibang instruments. A very good example of this is convertible debentures. Diba ang debentures, debt instruments yan. Kapag sinabing convertible debentures, these are available as a loan or debt securities which may be converted into equity securities. So originally, debt instruments yung convertible debentures. Pero pwede siyang i-convert into equity instruments. Kaya siya tinawag na convertible debentures kasi pwede siyang ma-convert. Let's now proceed to the types of secondary market. Secondary markets are primarily of two types. So they are stock exchange and over-the-counter market or OTC market. When we say stock exchange, this is a centralized platform where the trading of securities takes place. Centralized platform kasi yung pagbenta at pagbili ng securities ay nangyayari sa iisang platform na lang. So here in the Philippines, we have PSE or the Philippine Stock Exchange. When we say over-the-counter market, it is a decentralized market comprising participants engaging in trading among themselves. So opposite to na stock exchange. Kasi ang over-the-counter market ay decentralized. Ito ay decentralized kasi yung pagbenta at pagbili ng securities ay nangyayari sa iba't ibang platforms. At dahil decentralized to, bahala na yung mga participants na mag-engage sa isa't isa when it comes to buying and selling the securities. At this point, it is important to differentiate primary market and secondary market. So what are the distinctions between primary market and secondary market? Kapag sinabing distinctions, ang ibig sabihin niyan, differences. So what are the differences between primary market and secondary market? Securities are initially issued in a primary market. So for the first time, i-issue ng issuing entity yung securities or i-issue ng issuer yung securities. After the issuance, such securities are listed in stock exchanges for subsequent trading of securities. The trading of already issued securities takes place in the secondary market. So yung securities na na-issue dati sa primary market, ibebenta na yon ng investor sa ibang investor dito sa secondary market. Next, investors purchase securities directly from the issuer in the primary market. So it's a transaction between the issuer and investor kasi bibilhin ng investor yung securities directly from the issuer. On the other hand, in a secondary market, investors enter into transactions among themselves to purchase or sell securities. Dito naman sa secondary market, it's a transaction between an investor and another investor. Hindi nakasali yung issuer dito sa secondary market. So the issuer is no longer involved in the trading of securities. Next, in a primary market, the stock issue price remains fixed. So fixed yung stock issue price because it is the initial price of issuing the stocks. However, in the secondary market, prices of the traded securities vary. So, paiba-iba yung presyo ng securities dito sa secondary market since it is already affected by supply and demand. Next, sale of securities in a primary market generates funds for the issuer. This is a common sense. Siyempre, yung issuer, yung nag-i-issue ng securities. Natural, siya yung mag-generate ng funds. Transactions made in the secondary market generate income for the investors. Since this is a transaction between an investor and another investor, yung investor na nagbenta ng securities, siya ang mag-generate ng income. Next, in the primary market, issue of security occurs only once and for the first time only, while in the secondary market, securities are traded multiple times. So sa secondary market, kahit ilang beses ibenta at bilhin yung securities, pwede. Yung investor, pwede niyang ibenta yung securities sa other investor. In the future, pwede ring ibenta ng other investor na yan yung securities sa ibang investor and so on. Sa secondary market, sobrang dami kasi ng investors. That's why mabilis na mabenta at mabili yung securities. Kaya sabi ko, the secondary market helps in the liquidity of securities. Meaning to say, mabilis na makonvert yung securities into cash. Siyempre, mabilis na maibenta yung securities, so mabilis din na makonvert yung securities into cash.